Hey everybody, Dan here, stockmarketmentor.com. And I want to talk about Palantir. A company reported blowout numbers. We'll look at the chart in just a second, but a few things that really kind of jumped out at me that are really, really important just on a fundamental side. There's such a thing as the rule of 40. Um, I'm not an accountant. Not a day goes by that I don't thank the good Lord that I'm not an accountant, but I'm not. But I know the rule of 40. It's a simple SaaS, that's software as a service, software metric, that it adds two numbers together. Remember, it's called the rule of 40, and that is the year over year revenue growth rate in percentage terms. Adding to that, the adjusted operating margin, again, in percentage terms. So it's the growth rate percentage annual plus the adjusted operating margin annual. So if the total is if the total is 40 or higher, that's a good thing. The company's considered to be like a healthy balance between growth and profitability. So Palantir, let's say it definitely kind of meets that rule of 40. The revenue growth, again, year over year, revenue growth's only 93%. The adjusted operating margin is 62%. Now, let's do some simple math. 93 plus 62 is more than 40. It's 155. So the bottom line is just by looking just at the rule of 40, Palantir is absolutely crushing it. And that's really, really important. Now, I want to look at the chart here. I'll get that to you, but while I'm getting this set up, I want to invite you to join stockmarketmentor.com. We're got a lot of stuff going on over there, and guess what? It's always good. It's all good. And so I want you to be a part of it. Definitely check it out. In fact, if you do decide to become a member, just a trial member, even, that's fine. Email me at dan@stockmarketmentor.com. That's my personal email address. You can email me at dan@stockmarketmentor.com and introduce yourself to me. I want to know you're around, okay? So let's look at the chart now. This is the thing. A few things kind of stick out. The first one is the 200-day moving average. That's the red line. This is a daily chart. This is not good. It's not good at all. You can see this thing has been on a heck of a tear for a long time. And then after peaking here last year, it started to drift down. And so you see at the same time that this was drifting down, you can see this line here, the 200-day moving average was still drifting up. So at some point, they kind of met where the price, the downdraft, met the 200-day moving average. The 50-day, this was just such a perfect textbook chart. The 50-day moving average was up, gradually coming in to the 200-day moving average. And so you got this intersection right here. This was just like for very patient traders, frankly, this was a key sell signal right here. Again, this is for patient traders. And sometimes, look, I'm gonna go out on a limb here, and I'm just gonna say something. Everybody's concerned, including me. Everybody's concerned about the entry. Entry is everything. It's not everything, but it's the first thing. But everybody's concerned about the entry that they have on a stock because you don't want to chase too much because then the stock will inevitably, like as soon as you buy, as soon as you get a FOMO trade and really get in there, there is magically this tweet that goes out to everybody on WhatsApp, Telegram, all posts at the same time. You're in, time to sell the stock. So you're going to get hammered if you buy too high. It's almost a given. It's a rule imbued upon you and me by the gods of Wall Street. So you don't want to be chasing stocks. But then at the same time, you don't want to be trying to catch stocks and, oh, I'm going to get it right at the bottom. Hey, is such and such at a low? I don't even know what that means, and I'll tell you why. When you're trying to pick lows, Are you looking at an intraday chart and you're looking for the low of the day? Are you looking at a daily chart and then you just kind of want to know swing trade? Is this a low that's going to lead us over the next few weeks to higher prices? Or is this like the low of a stock where I can get in and then relax for a few years? All of those questions have completely different answers. And the best answer, the most universal answer is this. Okay, and listen to me, I'm giving you pearls here. Let's say you buy at the low. Okay, what does that mean? Does that mean like I bought at the low right here? I bought at the low. Does that mean that because you bought at the low, the stock's going to do this? You're going to make a gang of money? Or maybe, yeah, you bought at the low, and then that means that this just kind of drifts around sideways for a day or two or three or a week or a month or several months. So don't get fixated on buying at the low, just like you shouldn't get fixated on grabbing a stock no matter how much it's up. We want to have this middle territory, this middle range where we know where we're buying and why we're buying it there. Listen to me again. We want to know where we're buying it and why we are buying it right there. And to say, well, I'm just buying it because I want to make money. Well, I trade because I want to make money, but it kind of gets a little bit deeper than that. So you have to have a strategy that you're employing in buying a stock, and the stock purchase that you're making, if you're just buying, it's what I'm talking about here. That trade has to be consistent. It has to be congruent with the strategy that you have. All right. So I'll get into it with Palantir. So right off the bat, I want to buy uptrending stocks that are going higher. It's kind of my deal. It's pretty basic, but I'll tell you this. Yes, entry is important, but the number one thing beyond entry, before entry, is what's the stock? What's my criteria for the stock? I'll tell you, without even looking at the chart, my criteria for the stock is it has to be trending higher. The stock has to be above the 200-day. 50-day has to be above the 200-day. I don't really care that much if the stock's below the 50-day, as long as it's close. And that's kind of it. That's my basic criteria. Stock has to be above the 200. 50 has to be above the 200. The 200 and the 50 have to be trending higher. Okay, that's my initial screen. That's it. If a stock does not conform to that initial screen, it's not something that I'm going to really be looking at even. In this case, though, if we look at Palantir, this has broken every single rule. The stock's below the 200. The 50 is below the 200. Both of them are drifting lower. So if we were just to like reverse the chart, this would be a great stock to buy, like right here, right now. But that's not what we're looking at here. So this is the deal. I'll clear out these things so you can just see what I'm looking at. So this does not meet any of my criterion. And I'm not going to make an exception to that rule. Because if this time is different, if you find exceptions to the rule, then you shouldn't really even be having the rule. And that's just a fact of trading. Every good trader will tell you that. But it's hard to always follow the rules. In this case, though, again, I'm not buying this stock, at least not with that particular strategy. And I'll tell you what I am going to do, but first I'll explore that a little bit more. So why wouldn't I buy this stock? I got to put my glasses on because I'm half blind from 30 years of looking at charts. As I look at the 200-day moving average right here, stock is trading here. This is after hours, okay? Nice pop, boom. It's clear down here at 125. 65 after hours. Okay. So stock popped up 1250, 12.5% after hours. So this thing has crushed it. Volume, double average volume. So let me buy this. Why wouldn't I buy this? You can see how this is moving. I'll tell you why. Because the 200-day moving average is resistance there, resistance there, resistance there, even a little resistance there, but we're not going to talk about that. So this is the obvious point of sale. Again, it's up 1250 after hours, and 15 total. So it's already gone up a lot. Now, their fundamentals have really kind of been off the charts. They're doing really, really well. I'm not going to get into it because I'm not a fundamental guy, but I know enough about them to know when institutions need to buy, and that's what they're doing here. You're going to see institutions coming in to buy this stock tomorrow. It's probably even going to run higher than it is now. No telling. I'm not going to place a bet on that. I'm just telling you it's probably going to do that. You can see actually how these Bollinger Bands were kind of they're kind of squeezing a bit. It's not really a volatility squeeze per se, but you can see where they've kind of tightened up a little bit. So a push above here is going to give this some upside momentum, and this could run a bit. But with the 200-day moving average right there, this is the logical place for selling to happen. I'm not saying that it's going to, but I'll tell you this. If it doesn't happen here and the stock just continues to run, that's going to be interesting. It's going to be important. But in my mind, for a swing trade or a quick trade, something like that, go ahead and take this trade. But your upside is capped at about 8% because that's where the 200-day moving average is. So you can't say, oh no, my upside's capped at 200. Okay, well, good for you. If you're that great a predictor, let me know. I'll let you manage all my money. We have to assume that this is the resistance level here. That's what we got to assume, okay? So with that, what I would like to do is extend out here, and I don't see the urgency to buy this stock here, but I absolutely see the urgency to monitor this stock. I think you want to be keeping track of this stock because even if this just stays in this range for a while, it's not going to take too much longer for the stock to actually be trading up above the 200-day moving average. And during the time that the stock is up here, trading above the 50-day moving average. Each day that the stock is trading above the 50-day moving average is another positive number on the start of the 50, and the end of the 50 is a number that drops off. So gradually what I'm saying is these data points over the last 50 days continue to stack higher than the 50-day moving averages. So over time, you're going to see the 50 start to run up as well. So I could definitely envision this stock, if it just stays up here, I could envision, I'm going to leave this on for my edification. I could see this stock coming into a really, really good point, a good entry point to meet my criteria. Maybe yours is different, but to come to a good entry point sometime in October, if this just continues to do what it does. So that's the way I'm trading this. I'm just watching it. If you buy it tomorrow, you're definitely going to make money. Sooner or later, you're going to make money, whether it's a good entry or not. And the reason I'm saying this is wherever you wind up buying the stock, it's not going to be the all-time high. All right. The stock's not going to go to zero from there. Sooner or later, it's going to run up. What I'm talking about is becoming a really, really good trader. And the way you do that is you have your criterion that you're going to follow, like it's the law. And you only look at stocks that meet that criterion. But here's the other thing, and this is the important thing. Stocks that don't, like Palantir, don't disregard them. Put them on a list of stocks that you're monitoring for. You can call them like on the reserve. They're on injured reserve. We'll put it that way. Yeah, that's good. They're on your IR list, your injured reserve list. They're good stocks, good companies, just not quite where you want them yet. So do that with Palantir. And the other thing, again, subscribe to Stock Market Mentor. Email me at my personal email address, dan@stockmarketmentor.com. Introduce yourself. I'll respond to you. share a couple things with you, and then let's go trade together and make some damn money. Okay. Hopefully that works for you. I know it works for me, and I will see you next time. Okay. Pay attention to your entries, but always manage risk so that you can do what? You always trade without excuses. Okay. See you.